Hello, traders out there in Traderland. This is your weekend edition. Good through Sunday, July 8th, 2012. My name is Des Woodruff, the president and founder of freetradingvideos.com Incorporated, doing business as Grok Trade. We have a lot to get to, so let's just get started here. Dow, the S&P, NASDAQ, Russell's, all major indices took a bloodbath on Friday due to payroll rising less than expected. And matter of fact, we only popped up by 80,000 jobs, and the last 3 consecutive months we've been below 100,000 jobs being created. Not overly great, and the unemployment rate stays stagnant at 8.2%. Ouch. Markets didn't like that. We are down. If you notice, the NASDAQ Russell's leading the charge to the south. Banks down only 0.5%. So it's giving hope to the indices here. VIX really not confirming today's sharp sell-off, but commodities take a bloodbath. Down 1.3 on gold, silver at more than 2% in the red. And then the crude oil off by 3%. US dollar up 0.7%. And it looks like gold is at $15.83 and crude is at $92 and some change. And we do have a webinar coming up here on the 11th. It's free, psychological analysis. The markets stand on 3 legs: fundamental analysis, technical analysis, and psychological analysis. I highly recommend you do this. Get signed up. Click there. All right. Taking a look here at another chart. This came from, looks like Fox Business News. And if you look at this, jobs report deepens economic gloom. But this red line, it's hard to see, but this is unemployment rate back in the early 2000s. Rising here, 2006, 2008, 2010 area, 2011. But the thing that I want to show you here is this. This is nothing more than a bull flag. So go to the chart school, look at the bull flag. This is bad because this distance from here to here, this run up, take about 80% of it, put it right here. And that's the type of unemployment rate we could look at if the technicals are panning out the way that it looks like. Very sobering thought, because right here is at 10%, here's an 11%, 12%, 13% unemployment rate if the technicals play themselves out. I just thought that that was interesting. You can use technicals on just virtually any chart that's out there. Take a look here at the S&P daily. Couple things for you here, gang. I know there's a lot of lines. Pay special attention to the blue lines. We're in an uptrend. The uptrend is pinching together. We have a rising wedge, and we are now on a down leg coming down into the moving averages. So this could be problems coming up here. I did put on several shorts today. However, I do expect there to be a little bounce on Monday, but we'll see how that plays itself out. Here's the weekly chart. This is what's so problematic here. We had this big run up and then a drop, and then this pop up here goes to the 61.8% Fibonacci. We are hitting our head on that and showing weakness. If we start to drop from there, this big line that we have here, this is right, just nothing more than a bear pullback. You'd be looking at another leg right here coming down. If you bust all these levels of support, ooh, big time trouble. On the monthly chart, we pulled back. We have a lower low, a lower high, but this month we have a higher high, higher low. So we have a very good chance on the monthly chart to keep going higher, but it needs to make its move right now. We need to bust through some resistance areas. 1370, we need to get above that. If we could get above 1370, get some volume behind that, then we could get a nice little rally here. But the problem is we are going right into a rising wedge on the monthly chart, which is no good. The Dow, virtually the same thing, rising wedge, we hit our head, we're dropping, looks virtually the same on the monthly chart. On the weekly chart, We're fighting that 61.8 Fibonacci area in the 20-week moving average coming across, just like the S&P. So I'm not spending a lot of time on this one. And then on the monthly, or I'm sorry, on the daily Dow, we have a big rising wedge. We came down on Friday, touched, found support, rallied back. The question is, will we bust down below this? So will this rising wedge come to fruition and start breaking down? Here's the NASDAQ daily. NASDAQ daily has this big bearish flag type formation. If I do a Fibonacci retracement on this, we are above 61.8, so that takes us in large part out of harm's way. So that is good to see. But we are heading down at this moment. We are caught up in moving averages. On the weekly chart, check this out. A big time symmetrical triangle. So this last week we went high, touched, hit our head, dropped, and we're caught up within the moving averages. The question is, will we break out of this symmetrical triangle or break down below? The big, huge blue lines that we have here are major trend lines. That is a rising wedge, which is more bearish than it is bullish. On the monthly chart, if you look here, look at the till lines that I have, these two till lines. I'm going to switch this to a day or a line chart. You can see resistance, support, resistance, support, support. Those till lines looks really clean. When I go back here to the candlestick, it looks a little harder to see, but it's all right. We're at major support right now. If it starts to show weakness, anything below 28.75, mark that number down. You can see that right over here. Be wary of the markets as a whole. On the Russells, small caps, big symmetrical triangle. Again, here are my trend lines. Pay attention to the blue ones. If I go to a line chart, you can see how clean this looks. Very, very clean. The question is once we're at the apex, will we break down or will we pop out? Be watching this. On the monthly chart, this holds a lot of weight. If we go to the weekly chart, weekly came up, smacked its head, and dropped. Now we have what's called a shooting star reversal pattern, and we're starting to head down for the week. So the next few weeks could be hairy as far as small caps are concerned. And on the daily, we ran up, 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 up. Just an exponential move here. This was really impressive this last week. And now we're heading down. Things that go up fast, drop fast, and we're looking for maybe a support area around 790. Let's take a look at the banks. This is the daily chart on the banks, big symmetrical triangle. We smacked our head. We're dropping now. We're above major moving averages, but will we drop within them? Here's the weekly chart, huge symmetrical triangle. We're at the go time now. Will we break out or break down? We're at resistance. We have a doji after a run up, which surprised me. Next couple weeks are bearish. On the monthly chart, we're caught within a trading range, but we have this little high base, slight pullback to the rising 20-month moving average. We're now above the 50-month moving average, and we doji out so far for the month. The question is, can we break out? Especially if we get over 1854, gang, on the banks, that would be scrumptious. That would be quite bullish if we could do so. But we have a ton of resistance right here for you gold bugs out there on the monthly chart. This is problematic because we were in this uptrend. Now we're on the wrong side of this big line. However, for those guys that still are bullish, and this could get bullish, this is a bullish pennant formation. If it pops, look at 160 as resistance. But man, this huge trend line is going to be resistance. So you have some resistance at 172. But if we could pop, this could be a nice, significant run if it can get over these resistance parts. On the weekly chart, you can see it right here. But the problem in the weekly is more bearish than it is bullish because we've dropped. We made this low base. This low base is finding support at the rising 100-week moving average. But if that fails, woe to the gold market. And on the daily, just caught up in a symmetrical triangle. The problem is we're below moving averages at this moment. So we need to get back above them to stay bullish. We are below, looking for some support area, say around 150, 151 and some change. And for you guys that trade Facebook, on the daily, big time symmetrical triangle here. If I go to a line chart, you can see that. Just feast your eyes on that big triangle. Go back here. You can see it. We're at the apex, but we cannot release off the floor. So because of this, I think there's a danger of this thing dropping. So if you are long Facebook, be very careful. However, if we could pop up over 32, you could get a nice little run here. This almost has a 3 white soldiers type candlestick pattern, so you could get a sizable pop here. However, just be very careful because I expect this to go one direction or the other with some force. Here's the weekly chart. Drop, bear pullback. It should have dropped here. It didn't do this. It held its ground, so that it has hope of going higher. If I look at the monthly chart, it's not showing us too much because this is an IPO. Let's take a look at Apple. Apple here, we're in this trading range. Nope, it's a more of a rising trend. It's just an uptrend. Resistance, resistance, resistance. We're at resistance again. Support, support. Expect it to pull down, but we are in an uptrend right now, and I think the Fibonacci, yeah, we're beyond 61.5. At least it looks that way. Let's take a look here. Yeah, we are. So that's good. So Apple looking pretty healthy. This part doesn't look so great. Drop, pop, and it's not able to release off the rising 20-week moving average. Just be careful with this. We could build a double top, and this thing could turn over. On the monthly chart, high base, looking for a breakout to the upside. Phew, how was that for a bunch of information relatively quick? Again, make sure you guys get signed up for our class that's coming up. And if you want to do the newsletter, I do stock picks every weekend, each weekend, stock picks. If you want to try it out for 2 weeks free of charge, put in 2 weeks, and that will, in the promo code, and I give you 2 weeks free. Chat room, get signed up for that. You get 30 days free, no credit card needed. Just get in there and check it out. You know, day trade in the mornings here in the 2-on-1 courses. Mentorship is not for everybody. If you haven't gone to the 201 courses yet, you're just not going to be ready for this. It's going to be too advanced for you. 201 courses are for those individuals that want to learn how to trade, get the right foundation in place. It's a home study. It's going to take you over 6.5 hours to go through. It is the real deal. My trading secrets are right there. So that's it. Share us with a friend. Take care and very safe trading to you.